World stock markets have been roiled as a result of the spread of the coronavirus. It started with just a few cases in the Wuhan province in China, and by now it has spread to at least 8 cases in the United States, in Canada, in Singapore, in South Korea, in France, and is gradually spreading into Hong Kong and many other parts of the world. No wonder Dow Jones has opened with a gap of over 500 points on the downside. The European stock 600 is down over 2%, and so is the London FTSE. Naturally, there is worry of the economic fallout of the coronavirus. And although Japan fell around 2% along with the topics, the many other Asian markets were closed today on account of the Chinese New Year lunar holiday. Now, what should we assume could happen as a result of the coronavirus? Precedent can be had in 2003, where we had the SARS epidemic. The SARS virus was a very similar story that really caused an economic fallout, and the stock markets had fallen at that point of time. Now, the situation today is a little different, with the governments trying to act rather quickly, and in unison, they're trying to control this epidemic. However, the downside being that it has spread rather quickly in many parts of the world. So, travel related companies are getting hit rather badly, as there are travel advisories as a result, being issued by many countries. Do not travel this country, and so on. But what about if the cases are across the world? Then which country should you travel and which you should not be traveling to? So the coronavirus is acquiring rather deadly ramifications, and this will definitely go and impact world stock markets. In fact, one of the ramifications of the coronavirus is the rise in the safe haven assets like gold. Gold is now currently trading over $1,580 a troy ounce. Another fallout is that the interest rates are falling now, because if travel is restricted in an era of coronavirus, then you will find that a world economic growth, the PMI, the Purchasing Managers Index, is also expected to fall. And therefore, you will find that the gilts in UK have fallen to something like 0.5% for a 10-year gilt. And in the case of Germany, you find that the 10-year Bund is now trading at something like, is giving a yield of something like minus 0.36%. This is all a natural repercussion of world economic growth, which could be hit as a result of the coronavirus. Now, the impact of this virus could be rather short term, as was the case in the case of the SARS epidemic in 2003, where it lasted around 2 to 3 months, but was enough to scare the hell out of the world economy. At the same time, the masks are not very easily available. Testing kits are not there, even in a country like China, where the epidemic has originated. And one needs to take great care in terms of covering your face, your masks, and many other precautions, for which the world organizations do not seem to be prepared at this point of time. China is in fact building an exclusive hospital at this point of time to tackle the coronavirus. All this could have grim repercussions, not only the coronavirus, but the US-Iran hostilities, which I have told you from time to time will increase by the time we reach February, especially the middle part of Feb. Now, on a very lighter note, Manish Sisodia of the Aam Aadmi Party in India believes that water supply can be very clean in a city like Delhi, provided at the time that the water supply is coming, you have your taps on. So, which means he's trying to say, and there is a hashtag which is trending on Twitter called Scientist Sisodia, and that seems to be saying that if your tap is not on at the time the water supply is coming in by the Delhi Municipal Corporation, then what you're going to get is a lot of dust, you're going to get dirt, and you're going to get unclean water. And he believes that this is one of the reasons in physics one should be taking care of, and because of which people in Delhi do not get clean water supply. So, in any event, whatever may be the case, Mr. Sasodia looks to be a great fan of physics, and so are we. Let truth prevail, as is always the case. Going from here, we see the world stock markets getting jolted. As long as the coronavirus epidemic remains contained, you can see a subdued impact. But at this point of time, when the coronavirus is increasing and spreading from one country to another, and more cases are being reported, one needs to be rather cautious. As it is, I had mentioned that the world stock markets at all-time highs are really not justified for the economic growth that is expected to happen. And therefore, spreading of the coronavirus is only one of the other triggers which is going to go and impact world stock markets. Therefore, it is better, keeping all this into consideration, investors should lighten their investment portfolios and wait for better opportunities to enter. Those who are already in profits need to book the profits and wait for better times to find lower levels to enter into stock market. Happy investing. Take care. Bye-bye.